Don't put your eggs all in one basket. At least that will be the theme for our discussion today, where growing geopolitical tensions in the world have added to uncertainty to the global economy and raised the risks of investing in financial market. However, for smart investors, there are still many other investment options which offer good returns in difficult times. In its April Economic Outlook report, the International Monetary Fund, or IMF, has raised its expectation for global economic growth this year, citing strength in the US and some emerging markets, while warning the outlook remains cautious amid persistent inflation and geopolitical risk. Meanwhile, Indonesia's economy expanded faster than expected in the first quarter of this year as Idul-Fitri holidays, as the government's cash handouts supported consumer spending, even as risks loom over the outlook from slowing global demand and geopolitical uncertainties. Gross domestic product rose 5.11% in the 3 months through March from a year ago, according to the Statistics Office recently. That was higher than 5% growth forecast by most economists. However, geopolitical tensions due to ongoing wars between Israel and Hamas and between Russia and Ukraine has disrupted investment and economic activities. The escalation of the geopolitical conflicts has sent shockwaves through the global financial market. Unfortunately, while share prices in the world's major markets and major global currencies have begun to recover, the Indonesian shares and currency remain under pressure amid a large scale of foreign fund outflows. Many foreign investors have left the Indonesian stock market to find safe haven assets overseas, making investment in stocks no longer as attractive as before. But for smart investors, there are still many other investment options, which is still good returns in difficult times. Here are among of them. Gold. The bullion is considered a safe haven asset during a difficult time, as its price continues to rise even when inflation rate tends to increase. So investing in gold is a good choice because gold is not affected by inflation and its value remains constant. Bonds. These fixed income instruments are quite popular, especially government bonds, because they are relatively safer compared to other financial instruments. Investing in this kind of bonds is considered safe because they are guaranteed by the government. They also generally offer higher returns than bank deposits. Mutual funds. This form of investment is also safe in difficult times because they are managed by professional and experienced fund managers. In addition, mutual funds are also placed in various types of investment instruments such as shares, bonds, and deposits. The diversification makes investment safer because it is concentrated in one type of instruments. Now, the escalation of the geopolitical tensions and conflicts has sent shockwaves throughout the global financial market, and hence the Indonesian shares and rupiah remains under selling pressure. Now, our guest today, Lynda Ibrahim, is a business consultant and writer, and she will share her insights on the latest trend in financial investment and also how to choose investment options amid difficult times. Welcome, Lynda, to Economic Outlook.
Thank you for having me.
So good to have you here. Thank you. Well, Lynda, you know the escalation of global tension as the result of the rising conflict in the Middle East and the Eastern Europe has brought negative implications to the global market lately.
Yes.
Now, in your opinion, what businesses and perhaps also for individuals, what should we do in responding to such a difficult situation now?
Well, for everyone to bear in mind, like, first of all, priority should go to cash flow, especially if you're business, because doesn't even matter what your revenue stream is, expenses will come. You know, you have fixed payments to be made, like for rent, payroll, supplies, you know, for even your business to go on forward, those you have to have the cash for. So your priority should go to cash flow. Same with individuals. You know, doesn't matter. Maybe you're not gonna hit the target this year. You're not gonna get a bonus, but you still have to pay for your rent, for food, for maybe if you have children, for their schools and for education, for health. Those should be the first priority. Afterwards, then you look into your savings, then investment. Investments should really come after the cash flow, the routine cash flow, and savings first.
I see.
So that's that should be the priorities.
And you know, in difficult times, sometimes we think our saving is enough, and then it turns out that there are these surprises, expenses that we do not expect, right?
Exactly. That's why it's very important. Before you go investing, you should be having enough saving first. You know, because savings, the difference, this is what a lot of people I find confused about, is that savings have no risk. You know, you put your money in an instrument and it's going to grow. You know, well, the growth rate will be different from the type of saving investment, saving, of course, but investment, there's a risk. You know, you can actually lose money as well in investments. So that's not to be confused. And unfortunately, a lot of people, even businesses, sometimes confuse the two of them.
I see. That's a good point right there, Lynda.
Yeah.
Now, let's talk about the many varieties of investment. Let's talk about stock prices first. Now, stock prices on the local stock market have remained under pressure lately due to the global uncertainties that is happening in the world today. Do you think investing in stock is still good enough for long-term investment?
Well, back to the priorities. If you have enough cash, you know, your cash flow is fine. You get a healthy savings, then yeah, you could afford to have long-term investment in stocks because maybe they're not going to get rebounded this year, for example. I personally, though, think, well, this is coming from someone who already worked in the capital market back in the 90s, that for just the general investors who do not have the time to look at the stock market on a day-to-day basis, their best bet is actually either putting in government bonds for very long term, or they do for mutual funds. Because mutual funds, you buy a portion of both, of course, the risks as well, the risks and the results of a bigger fund that is being managed by actually certified fund managers. You know, so it's not going to be depending on you looking at the stock market every day and trying to figure out, oh, should I sell, or should I buy, or should I hold, you know. So I think if, assuming that the first two are already taken care of, then yeah, maybe have some mutual funds. The good thing about mutual funds as well is that, like stocks, if you want to sell it, there's always going to be the market for it. Yeah, the value would be different from day to day, but it's not like, for example, properties. Because properties, it's not like a live market, right? I mean, you can
especially at the moment,
right? Especially at the moment, you can try to sell a house. Maybe it's not gonna like get sold in like 2 months or 2 years, you know. But the capital market is there. You might not like the price, but there's always going to be a price to sell it at.
I see. So. Now let's talk about the more conservative investment, especially here in Indonesia. We know that women like to buy gold in the form of jewelry, and usually they use it for investment and they use it on a daily occasion. Do you think such practice is still considered appropriate nowadays? Is it still a good choice?
I'm going to put aside the cultural signification of it, because for certain native groups, it has certain cultural meanings.
I see.
So just put that aside first. Just look at the gold as gold jewelry. What a lot of people often do not remember is that when you buy gold jewelry, you don't only buy the gold, you will also pay for the design. It's going to be embedded on the selling price, right? So that's the price that you pay. But when you go and sell them, usually the gold shops, gold stores, whatever, they're just gonna look at how much it weighs on gold, which you're gonna be losing the value that you pay in the beginning,
the extra value when you purchase
for
the
design,
gold.
because you know, no store's gonna pay for the design, right? They're gonna melt the gold anyway, right? They don't care. So that's what I think a lot of people would have to remember. So don't yes, of course, if the gold prices soar, for example, you're going to recoup whatever potential losses you're going to suffer from the design value. But sometimes it doesn't happen. And I think people need to remember that. Maybe buy the gold bars, Aneka Tambang, Antam sells them. I mean, you can just buy, and there's actually a market, quite a liquid market to buy and sell for that. If you really want to invest on gold, I personally would advise to just buy the gold bars.
Just buy the gold.
Yeah, and the commodity, the commodity, not the jewelry.
Yeah.
But if you want to buy it because you think you're going to look pretty in it, that's another
thing
to
consider.
I'm not going to comment on that.
Now, let's talk about the present time, where recently a survey indicates that despite earning more, the Gen Z and millennials are still reluctant to invest. Yeah. What do you think about this survey result?
I personally haven't looked at the survey, so I can't tell. I don't know about the methodology and how this survey was conducted, or who are, because Gen Z and millennials, large demographics. So, but I would assume that maybe some of them, having come from a successful Gen X or a late boomer parents, so maybe they expect to have a generational wealth being passed down to them, maybe, or maybe the Gen Z thinks that it's already out of their reach, a lot of like property.
Would you say there is a lack of knowledge for the younger generation nowadays? Is that the issue here?
Could be. They think that problems will just be solved out for them.
I see.
Or could be that, well, I saw a report by a media last year that some of the Gen Z actually sort of like giving up already because they think it doesn't even matter, it's going to take them like 40 years to save to actually buy a property, so why bother? I'm just going to, buy my boba coffee or tea or whatever today, because I'm not going to be able to afford the housing anyway. So maybe there's that too, which is sad.
There's that sense of skepticism for the current generation.
Could be that way. Could be as well.
Now, for those youngsters who are planning to invest but not have the knowledge of how to invest or what to invest in, what would your advice be for them?
To be very careful getting your advices from, because in this digital age, there's so many self-professed financial gurus.
Especially on YouTube.
Oh, Lord, yeah. And then I sometimes listen to them and I said, no, it doesn't work that way, And I'm very concerned because a lot of them, they're very young, and I think they made a kill at the in capital market like once or twice, and suddenly they thought that they knew everything about it, and all they would teach at this YouTube sessions or whatever podcasts is just how to get rich very quickly, and that's not what investment
is. That's
is.
very common now. People just want to get rich instantly, right?
That's not. It doesn't work that way. Investment
takes time.
Takes knowledge.
It
takes knowledge and takes patience and takes knowing what you need, knowing what you have, knowing what's available in the market at the moment. So, for example, maybe you're in need for a long-term investment. Maybe the next 3 months there's not going to be like a good government bonds coming. So it doesn't mean that you have to rush immediately at those 3 months to just buy stocks. No, because you might lose it in 3 months. Maybe you just better off putting it in time deposit, waiting for the next government bonds to come out. That's from knowing what you need and what's available. And a lot of people don't want to think about it. They just want to feel like, oh, I want to get rich like that person who made a killing in ABCD investments. So, and then I'm very concerned about the digital currency at the moment. You're talking about crypto, and it's suddenly, I get nephews and nieces who didn't even know the difference between time deposit and savings and mutual funds and stocks, and suddenly are all about crypto. And I'm like, you have to understand financial structure first before you even go to something completely new. So
don't go to an investment blindly. Basically, that's what you're saying,
and
right?
go with the basics first. It's okay. You don't have to look cool. I go back to them and say, you want to be rich, right? Okay. Then maybe you don't have to be cool today. You don't have to go buy crypto, as long
as
like
you don't need to be rich today.
Right? Yeah, and you don't have to be rich today, and you don't have to look cool today, as long as you're going to be rich at the end, right? If that's really what you want. So,
A last question, Lynda. You know, like it or not, we have to have savings as well as investment plans for
savings first, even
for the
before
future.
investment,
Yeah. How can we ensure that we have the budget to make investment, like where to put the investment in, and how do we allocate our investments?
Go back to what you actually earn and what you need, right? And you have to take a look hard, especially these days, you know, at your expenses. You have to separate between the needs and the wants. Do you really need fancy coffee from coffee house every day? Or maybe you need it once a week.
That is a big expense,
That is a
especially
big
if you
expense.
drink coffee every day.
That is a big expense. Do you really need a pair of shoes? You know, new pair of shoes or things like that. Do you really need to go traveling overseas?
Every
or
3
even
months.
traveling, or even traveling at all. You know, maybe you don't. You know, so go back to all of that. You know, and separate the wants from the needs. Then you're gonna know exactly what your basic financial structure is, and the scheme that you need to get to be safe during this uncertainty, and then to actually reap benefits later on. And I always say, I'm very conservative about this. You go with your cash flow, then you go to savings, then you talk about investment. It doesn't mean you can do all three. Sometimes if you have enough, you can do all three, and that's okay.
But do things step by step. That's your main
do
advice.
Do things step by step.
All right. Okay, Lynda Ibrahim, business consultant as well as writer. Thank you so much for being here on Economic Outlook.
Thank you for
having me. And we're looking forward to have you again next time.
Looking forward for that.
Thank you,
Lisa.
Lynda. Thank you.